I say this every month, don't I? It comes down really, really quickly, doesn't it? Well, the Fed's obviously looking for a rise in unemployment. I'm not going to say that directly, but we'll see if that comes to fruition a wee bit today. 200,000 new jobs for November is the headline that they're looking for. Anything significantly below that keeps things ticking over. 180,000, 200,000. That'll say that they're on track. Anything significantly below that, so around about the 100,000 level, would suggest that their actions are finally taking place and jobs are getting tighter. But at the moment, jobs are not getting tighter, but the jobs market is loosening up. At the moment, there doesn't seem to be great data to support that. We've had job openings coming down a tad this month. Yesterday, ADP missed quite significantly on Wednesday, so it's going in the right direction. Obviously, Powell's comments on Wednesday. Really, it's had sort of mixed reviews. I read it as sort of as hawkish as the markets were expecting. Others read it a bit more dovishly, which is why the stock market rallied so aggressively. But I think basically it was just hearing it from the boss's mouth. Is my interpretation of things, and things had got a little bit oversold. It was also, remember, it also coincided with the end of the month, beginning of the new month, November, December. Typically quite strong for stock markets. We've had this big unexpected rally in October and November. So whether the follow through and the Santa rally as far as stock markets are concerned into year end, we'll see. But as far as the dollar's concerned, let me just put some charts up. Let's do the euro. The dollar has obviously. Just move me down. The dollar here has obviously significantly declined this week. The euro here went over 105 and it's currently trading at 105.35. So a big rally. We've got the daily time frame for this. Big rally for the euro this week and all the other dollar pairs as well. Sterling's over 122. The yen went all the way down to 135. Where's my yen? My yen chart here. Went all the way down to 135. And gold, I know lots of you are big gold traders. Gold went over that magic 1800 handle yesterday. That's the daily chart for gold. So good afternoon, everyone. Hope you're all well. We'll come to your questions in a minute. Emma's asking, what do you think about the next move of gold based on non-farm payroll? Well, basically, as I said, if we get under, say, 150,000 to 100,000, that should give a lift back to the dollar. Suggesting that the markets is easing and the weakness in the dollar's gone far enough for now. And a big beat would suggest that the hawks and on the Fed will get the upper hand even more so, and we might need to see that the terminal rate they talked about, which is sort of fiddling around 5%. It was sort of 4.88. It's now around 5. Moving to approximately 5.25 in the first quarter of 2023. So we've still got some legs for the dollar to bounce. Obviously, the data today, Emma and everybody else, is obviously it's the last data point of the year. There's still obviously all the central banks to announce what their next steps are. We've got the meeting from the Fed on the 14th. So let's see how it all pans out. So this could be, it could be a big move or it could not be a big move, but we've still got a few minutes before the numbers come out. So let me just go through the expected numbers. 200,000 is the consensus for the numbers, both on the Bloomberg and the Reuters poll. The spread was about 350,000 was the top number, and it was down to 75,000, the lowest one I saw this week. Earnings remain key. They always have. I've talked about this for many years. 4.6%. Are earnings starting to cool? Are the services jobs wages starting to cool at all, or is there still very, very tight market there, and employers aren't to pay over the odds to get the right sort of people? Unemployment rate 3.7%, which is more or less full employment. To be honest, give it a tick or two. That's more or less around that full employment level. So is this going to start to rise? Remember, I like to look at the wider rates for unemployment as well. That U6 number, it's under 7% at 6.8%. Is it going to start to tick up to show that the wider measure of unemployment is starting to creep up? But we'll see. Participation rate 62.2%. But let's see what the numbers look like in the next minute or so. Let me actually let's just share our calendar here. If I just share their calendar for a minute. Chrome, I'll just share our calendar. Okay, so this is the data coming across. Let me just update this. This is just an internet connection, so apologies for that. I can't use my terminal. So data's waiting to go. And we'll come back to our requests later. There's lots of you in here today. Dollar CAD, pound, cable, euro, sell at 102, says Anwar. What's happening to gold? What's happening to gold? A lot of you asking about gold. Euro, is the pound a sell? Well, pound, it all looks pretty good at the moment. So let's have a look what's the numbers saying. So we've come in much stronger than expected. 263,000 is the headline. Wages, again, so that squeeze on services wages is still in place. So we're up to 5.1%, the annualized rate for earnings. Participation rate is flat. That's one tick lower than last time at 62.1. Earnings doubled, 0.6 for the month of November, 0.6 of 1% compared to expectation of 0.3 of 1%. And last month has been moved up as well to 0.5 of 1%. So 263,000 is the headline. Unemployment remains flat at 3.7%, so it's not ticking up. And in fact, the unemployment rate in that wider U6 has come down to 6.7%. So the dollar one would expect would get a lift from that data, suggesting that perhaps the action. Remember, the Fed have moved. Let me just share the charts again. What am I doing? I'm sharing a screen. Share. There we are. This is gold coming down. This is the 1 hour chart the daily chart for gold. If we go down to the 1 hour time frame, there we are. It's tanking. Tanking. It's rejecting that key 1800 level, big psychological level. So we're down at 1785. This is the 50-hour moving average for gold. Our euro we'd expected to have come off as well. So euro's down as the dollar's picked up. So we're back under that hugely psychological 105 level. So it'll be interesting to see where we finish Friday for the euro. 105's been given up. Obviously, lots of profit this week as this pair has rallied as the dollar's weakened. But as you can see here, relatively, it's a minor move so far. But we'll see where we finish for the day. So it's a stronger dollar immediately on the announcement of the news. And as I say, we'll get to your requests in a minute. So let's just go through the majors. Let's have a look at the Aussie. Aussie also down in the immediate aftermath. There's a 15-minute for the Aussie and the yen, which was down here at 135. Testing. This is the daily for the yen, guys. This is the 200 moving average here, 134.17. All the way down here. We were all the way over 150, not that low. Testing 150 not that long ago, weren't we? So we can see immediate reaction. Dollar has picked up against the yen at 135.52 at the moment. We'll come to your requests in a minute. So just a quick recap. If you just joined us, non-farm payrolls has beat. It isn't what the Fed were wanting to look at. 263. That's much better than expected. Last month has also been revised higher. So there's jobs still getting created in that US economy from 261, which was a good number, to 284. Average hourly earnings last month were also upgraded to 4.9% from 4.2%. They came in at 5.1%. So that services sector in particular, I haven't seen the breakdown, but it was certainly the services market sector that was having to pay those higher wages, even though we've seen these huge layoffs, particularly in the tech sector and particularly on the west coast of America. But 5.1% average hourly earnings for November. It might be skewed by the holiday and Black Friday as well. Average hourly earnings, 0.6 of 1% from 0.5 of 1%. And again, that was upgraded from 0.4 of 1%. So the data is all very dollar positive. So it means that the hawks will still be in charge of the Fed. This idea of a nailed on 50 basis points on the 14th of December. It was over 85% at one point earlier in the week. It's around about 78% from the Fed funds futures expectation. That's likely to have slipped on this data, but it doesn't really. The data's not really strong enough to push them off. I can't see. Just my view on things. I can't really see the Fed going to another 75 basis points in December. It may mean that they might cool to 50 in December, but the anticipation of when they get to the top of the cycle may be extended out. So this idea of the terminal rate going over 5% is looking perhaps more on the cards, but certainly inflation seems to be obviously their number one target, but jobs seems to be holding up, and then it's not getting squeezed as many were expecting as they attacked the inflation data. So that's suggesting obviously more people in jobs, more people paying tax, and more people buying stuff. So therefore, pressure on inflation may start to revert. We've got inflation data from other parts of the world next week. We've also got PPE data from the United States next Friday. So have a look at that as well. So let's get to your questions, guys, ladies and gentlemen. So Emma, gold. Let's just have another check of gold. See if we probably haven't moved much on since we had a look at it. So this is the 1 hour. That's down. Significantly rejecting that key 1800 level here on this 1 hour time frame, but that remained very bid into that. People probably just messing about with that really as we went up over and above the 1800 level before the payroll data, but that's certainly moved down. Going on from here, this is a key level where we are now at 1785. If you're going to trade, if you're trading this intraday, this on the 1 hour chart, the 200 hour is down here at 1764. Whether we get that low or not, I'd question that, to be honest, at the moment, unless there's a follow through. Next support sits at 1775. So we're at support at the moment, 1785. Next support, 1775 on my 1 hour charts here, and then 1765 where the 200 hour sits. So $10 blocks if this decline continues. Obviously, the resistance is at the key 1800. Emma, and all your other gold traders, that includes Logitech, Sai, my friend. And Elegance. Elegance is asking about gold as well. So there we go. Sell gold. Well, that's exactly what's happened on that stronger than expected payroll number out of the United States this afternoon. Dollar yen, says Sibozi. Where's my yen chart? Where's my yen chart gone? I've lost my dollar yen. There it is. There it is. So this is the 1 hour one, my friend. It's continued. It's declined. Let's go to the daily. It's been declining all day. All day, what I'm talking about. It's been declining all week, and it's been declining most of November, hasn't it? From its test of that 150 at late October. So it's been moving down. The Bank of Japan clearly intervening, and we ran all the way down to the key 200-day moving average here. This red line here, it sits at 134.35. So that's your high level support, Rosie. We didn't actually test it. We tested it today, actually, as we've moved down again, but we're at 135.65 now. So the 4 hour still looks very weak, and the 1 hour has bounced a wee bit, obviously, on the data. So that flag here intraday, we're back into the upper half, but you can see it's even on the 1 hour time frame. The 20 hour moving average is moving down. The 50 hours obviously still moving down. The 200 hours still moving down. So this remains biased to the downside, but obviously non-farm payroll has changed that significantly. So to the upside, we need to break the top of the Bollinger Band, which sits through there at 136. So 136 is key resistance to traders today. Then we've got the 50 hour, which sits just above there at 136.35, and then the 200 hour up there at 138.50. So 138.50, 136.30, and then 136 itself is resistance. If that doesn't break, we're going to go back down, and we could test that 135 handle again, Sabosi, on the dollar yen. But that's a strong dollar positive non-farm payroll data that's just come out. Has moved the market like this. As well, sell the euro at 102.9. Interesting to see what's happened to the euro, my friend. I think you've been caught okay on that. Sell, presumably, does that mean you mean all the way to 102.29? Well, this is the 1 hour on the euro. It's given up the 105 handle, so that's a major resistance. We're through or trading right at the 50-hour moving average, so 104.60. Is key support. If that breaches, obviously, then 104.50 from a psychological point of view, then 104, and that's going to be the 200-hour as well by the time we get down to here. So where we are now, 104.50 or 60, 104.50, and then 104 itself, where the 200-hour comes to the downside for the euro. But it's had a great week, so if you've been long all week, people will be bagging profits on that very strong and surprising non-farm payroll data out of the United States. I failed to mention, I know he's asked about the CAD, but the Canadian data was better than expected. The net change for November came in at over 10,000 new jobs. It was expected to be only 5,000 new jobs. Remember, the Bank of Canada are meeting again next week. They're expected to raise rates. Is it 50 basis points? The Bank of Canada, I can't remember, was it 25 basis points? There's RBA as well tomorrow, next week. Anyway, the Bank of Canada certainly expect to raise rates again next month. We've got this sort of housing bubbles in parts of Canada as there is in Australia. But 10,000 new jobs for November in Canada. Wages flat, 5.5%. Participation rate also flat at 64.8%. And unemployment rate has actually come down to 5.1%. So dollar CAD will probably cancel each other out. Dollar CAD here on that data, 15 charts. Prove me wrong. Dollar spiked higher against the Canadian dollar here on that 15-minute. Look at that jump there on that data. So yeah, dollars bid across the board, even against the relatively okay Canadian data. Obviously, it's huge. It's very, very small increase, but it was better than expected. So good data out of Canada. Better data out of the United States, and dollar CAD is back to 135. I know nobody's asked about 135, but that's the key data we've seen today. Where are we? Who's next? Let's have a look. There's lots of you in here, so good afternoon to you all. Hope you're well, staying safe. Logitech saying, now sell or wave spike, but I don't know what you're talking about, Logitech. You're talking about the euro or the dollar yen? Dollar yen. Ishak is still, there we go. Someone did ask about the dollar CAD. Sorry, Ishak, sorry, excuse me. Dollar CAD, this is the 1 hour time frame. Let's actually go up to the daily time frame. As with most of the other pairs, or contrary to most of the other pairs, the dollar's been moving up against the Canadian dollar in the last few days. But we're capped, as you can see, the top of the Bollinger Band and the 50-hour moving average coincide at 135.70 level. So that's a key big wall to get through. The 50-hour moving average, the 50-day moving average at 135.70, and the top of the Bollinger Band. As the Bollinger Bands have come down, they're compressing, and we're now going sideways. So we're consolidating to the upside. But again, you can see we've floored here in the middle of November at 132.30. Whoops, that's up there. I was going to try and put this on, wasn't I? And it's sort of been ticking higher. There's a bit of a support trend line. I'm hoping to draw on trend lines. But crossing through the key 20-day moving average, which sits at the key psychological 134. So again, some big, significant round numbers. We'd rallied to 135, so the dollar was up against the Canadian dollar. Canadian dollar under pressure from what the Bank of Canada may be doing next week, and also obviously the oil price decline we've seen in the last few days, down to under $80. We're back over 82, I think. This morning. So dollar CAD here remains sort of bid on a daily time frame, but capped at 135.70. So if we come down the time frames, 4 hour still remains bid. There's that 135.70. So we're up. 4 hour has a resistance at the key 135 again, where the 200 period moving average comes in. Intraday, we've been sort of ticking higher, waiting for the numbers. spiked on the both the employment data from the United States and Canada, but capped at 135. So we need to, it's having a go at 135, but that's a big resistance, 135, and then 135.70 here is the next resistance intraday. Ishak, I don't know what time frame you are trading that. Haida, Euro Oz is Euro Oz. Let me zoom in a bit. This is the 1 hour time frame. Haida, I don't know what time frame you're trading it, but it's been bid. Let me just put the period separators on, so I'll see where we are. It's been bid from this big move down to 150 or 152 or 153 yesterday. We've run through the 50-hour moving average, run through the 200-hour. So there's some key support levels here, my friend. So we've got support, or resistance, I should say, here at 154.46. So you can see how we ran to it yesterday, broke through it briefly this morning ahead of the payrolls, came dipping under it. So we're really sort of channel bound here. So the support today sits right through the bottom of the Bollinger Band there at 154.25. Our channel before payrolls was really here, the top of this this morning's rally here at 154.65. So a nice 40 point, and now we're breaking out the top. So this is more euro beneficial than Aussie beneficial. Why would that be? Well, the Aussie is much more sensitive to the dollar and to obviously developments in China and other parts of Asia than the euro maybe. So this is sort of biased intraday, at least to the upside. So if we break this top here at 154.65 and we get over this fractal high here and push a new one, so that would be a new one for Friday, be a new one for Thursday. Wednesday was around about, and Tuesday. So if we zoom in again, so we're at our sort of weekly high here, aren't we? Going back to on our monthly high for the sake of that. So see where we are now is a key level. These fractal highs coming in here. So we spiked through it on the data, and it's sort of biased to the upside. So if this is our support here, and then the big support here at the bottom of the channel. So it's edging up. It needs to break out in one direction, but it looks like it's biased to the upside. Although, as you can see here, the MACD here on this 1 hour time frame high is actually starting to decline. So, but that was ahead of the payrolls data. Stochastics are still rising. RSI 63 still rising. So this really wants to break through here, and next level above that will be this break here on, into fresh air area. As far as the higher time frames are concerned, it's very much channel bound. And the support is coming in where we are here. So the 50-day moving average is coming to coalesce with the 20-day moving average, which is that line that we drew there on our 1 hour time frame, is that 154.25. So that's absolutely key. Okay, so again, break this level, we're into the upper half of the daily Bollinger Band, and the next resistance is from last week. Friday, Thursday, Wednesday, Tuesday, this week I should say, at 155.40 zone. That's the top of that daily channel, isn't it? And the fractal highs have pushed up high but couldn't get any higher. And then that's the daily close. And then the top of the Bollinger Band now sits, remember, Bollinger Band's 2 standard deviations away from the mean, 155.65. So 155.65, 155.40. And that support needs to hold today, 154.65. The top of the channel, bottom of the channel today, 154.25. Hi, I hope that's answered your questions about the euro. Also, nice to look at something different, my friends. Okay, hope you're well, guys. Assad, yen. I say yen's, as you might expect, dollars rallied from a big decline all week here. You can see the move here. We need to break 136, top of the Bollinger Band, and the 50-hour moving average if we're going to go any higher. That might prove resistance today. Support, obviously, 135, 134 as well. Moves around quite a lot, but that's coming back significantly, but not half as significantly as the decline we've had for all of November. And here at the end of November, we went under 136 and into the big support at 134.50 on the end of day basis. So we've bounced off the key 200-day moving average, but are we going to move any further up? We need to get back over 138 really if dollar yen's going to perhaps turn around this big downtrend that it's been in all of November. Actions from the Bank of Japan taking over as the yen, as the dollar has continued to cool on expectations that the rate hike cycle is possibly coming to an end. 50 certainly looks like 50 basis points for December, but what happens into the new year? And that's still a very, very strong jobs number. Edwin is asking about cable. Is it the best time for a sell? Well, it depends when you bought it, my friend. Where's cable gone? Sterling. I lost my sterling chart. There it is. So sterling's had another one that's had a really, really strong week, obviously against the dollar. Here, it's got the daily first. So it remains big, doesn't it? We're way up and it's strong. There's major support here at 118.75. Psychologically, the big 120 level was breached and broken this week. We also broke the key 200-day moving average yesterday on the big ramp and rally up through 121 and 122, and we even spiked through 123 this yesterday evening, and we tested it again this morning, but we've come down now, obviously, on the stronger non-farm payroll data. So I don't know how you're trading this, Edwin, but if you've been long this all week, hopefully your stop loss has taken you out of that, because that was in very much of a channel. Last leg up was yesterday, wasn't it, to test 123. Lots of smart money would have got out probably before 123, but certainly you can see how we've just gone sideways. 122.15 was the bottom of that channel yesterday afternoon. I don't know how you're trading this, but certainly the channel 122.25 gave way as the data broke. So longs would have closed out. But as I say, on the higher time frame, the daily time frame, obviously you can't make a decision on today. But as of yesterday, it was still very bid, and we're down today, but we're over the 200-day moving average. However, that's where we are going back to test now. 121.45 is a 200-day moving average, and that's where we are now. Coincides with the 50-hour moving average, which still remains positive. So if that breaks today, we're back to 121, and then the 200-hour moving average sits at 120.50. So some potential big moves. We've had a big move up. It's a big current candle down. It's still got 10 minutes before it closes, but it's likely to hold that 50-hour moving average there. Cable, so it remains big, but to the downside. Dollar CAD says elegance. Did we not talk about that a minute ago? Was that not for you? I can't remember now. Dollar CAD. Let's have a look at it. Anyway, let's do it again. As I say, it's supported here. That's that trend line I put in, didn't I, on the daily time frame? That's our daily trend line for dollar CAD. 4 hour, as it's been support, bounced off it. We've got resistance at 135. The 200 period 4 hour is at 135.7, so just above that. So there's a big thick wall there for 4 hour traders. Intraday, guys, we sort of bias to the upside still, interesting, and a big lift, but really you want to see it break 135. So it's biased to the upside on the 1 hour and the 4 hour. The daily time frame also still biased to the upside, ironically, but the big resistance on the daily time frame is 135.70, where the 50-hour moving average and the top of the Bollinger Bank coincide, elegance, my friend. So still biased. A break of this trend line and the 20-day moving average at 134 will take us down to test this low of November, which took us to 132.40 zone to the downside. And I've lost where I am. Just bear with me. Accountant and an auditor. That's an interesting handle. Says the euro is a sell. Well, it certainly is on the non-farm payroll data, given we had a big rollover, big beat, 265,000 or 263,000, the actual data, wasn't it? Compared to expectations of around about 200,000. Many were looking for something below the 200,000 level, but that's a strong number over the 200,000 level. Has lifted the dollar. So euro dollar very much to the downside and breaking under that 50 hours. So we're currently trading 104.45. So it's to the downside accountant, my friend. It's as well. We just answered you there, Edwin, I think, haven't we? Are we doing the same thing? Sorry. Dollar yen, Assad, yeah, we didn't. Yeah, perhaps you put that in twice. What about gold? Says Thinon. Well, gold will have declined from that. Well, we did. We saw that it declined, didn't we, as the data broke from the key 1800 handle. But it's another one that's had a really good week on the back of the weaker dollar. Time to bag some pips, one would assume. But here on the 1 hour daily time frame, remember, guys, this is the key 200-hour moving average. 200 day. Yes, 200-day moving average at 1761. So it's been, it's been strongish all week, and we had three consecutive candles higher. Big old candle yesterday to start the month off, took us through the 1800 level. Didn't seem to be any more buyers up here. The dollar's improved on the jobs data, and we've come back to 1785, which is our resistance here in the first leg up during November. So 1785 is the key support level. Next support is the 200-day moving average at 1760. And then we come down to the 20-day moving average at 1750, another big round number. So 1760, 1750, 1785. And then the 50-day moving average sits down there at that key 1720 level, which was a resistance when we were trying to move higher during September. Okay, so some big levels for gold traders. As far as today's concerned, obviously we've rolled over, rejecting 1700. We've broken through the 50-hour moving average at the moment at 1785. We're at 1783. So this candle's about to close in the next 5 minutes or so. So that's looking relatively positive, but relatively negative to the downside. And again, lots of systems are trading on the end of hour basis. We'll be looking to take that lower potentially up. Obviously, the shorter term guys maybe looking for a markup. 15-minute hasn't moved up. 5 minutes having a problem moving up, and the 1 minute is still sort of bouncing up a wee bit. It's come back into the upper half. So short-term traders, this is the 1 minute chart for gold as a cap at 1787.58. We're currently trading at 1785.45, so it's perhaps moving up, but certainly on an end of hour basis, it's still down on a stronger dollar, and the dollar hasn't reacted on that as well. It's continued to follow through. Elegant. I told you guys, anyways, we killed it. Okay, Elegant, well done. I hope you're happy. Oja, sell gold. Well, there we go. There's gold going down. Currently. So hopefully you short-term guys back some pips on that. That's the 5 minute. It's looking quite nice, isn't it? It breaks out really aggressively. Retracing another leg down. It's retraced a wee bit at the moment, but that's still negative even on the 5 minutes. So we went as low as 1778.50, as I said. So 5 minutes trying to tick up, but still short on gold. We moon, sir. Mohammed, good afternoon. I'm very well, my friend. I hope you're well and staying safe. And you have a good weekend. Dollar yen asked Assad, buy or sell? Well, again, it's all about your time frames, isn't it? So I'm not allowed to tell you what to do. I can show you what the charts are telling me. The dollar yen on the daily basis remains short as far as I'm concerned. It's under half the Bollinger Bands. The Bollinger Bands are moving down. They're nicely aligned. The moving averages are aligned. We've got the 50, the 20, and the 200, which is now coming into play. So it's got some support. This looks like a potential buying opportunity, but it's too early to tell because there's been some big down candles here on an end-of-day basis. And as an end-of-day trader, you can't make a decision because the day isn't over. But from yesterday, that was a big down day, wasn't it? But you might have sort of bagged some of your profit as it's ran into that key 200-day moving average. But as you can see here, if I zoom this up, the candle finished flat. So it closed at the low of the day yesterday, down here under 136 and even under 135.50, didn't it? So we've been down intraday to test this 200-day moving average there at 134.48, call it 134.50. but that still looks down to me. I wouldn't be looking to buy this until we recoup 140 really, and we move over the 20-day moving average as an end of day trader. But obviously, intraday it's a wee bit different. So we go back to I don't know what time frame you're looking at, Assad. So and it all depends on what sort of trader you are. Are you a trend following trader? Are you a mean reverting follower trader? Are you trading 5-minute candles? Are you trading 4-hour chart, 4-hour candles? It's do you use moving averages? Do you use Ichimoku? Whatever it is that gives you your edge is what you should be trading. You're following the rules. It's all about sticking to your rules. And number one rule in trading is risk management. Minimize your losses. Accept your losses. Get out when you're losing. Leave your ego outside. And just accept it. And similarly, accept your winning trades. They can be just as emotionally draining and upsetting as losing trades. And I'm sure anybody that's been trading for any length of time would agree with me. Or not, I don't know. It doesn't really matter. But anyway, what we say, dollar yen, it's down on the daily. So let's go down the time frames. The 4-hour still looks weak. Although it's bounced quite significantly from that key daily time frame, but it's still way under its pivot point for me, which is the 20-period moving average here on the 4-hour time frame, which sits at 136.97. If you're a 1-hour trader, it's looking okay. It's moved back up, so you might be looking to take that a bit higher and perhaps target 136, but we didn't do it on the immediate announcement of the news. Can you look into the chat again, sir? Can I sell now? I don't know what you're talking about. Gold. To the upside, Assad, 30 minutes, a bit more positive. It's been drifting lower, went lower, big leg up. Obviously on the data, so that's looking over its 20-period moving average, midpoint of the Bollinger Band, over its 50-period moving average on the 30-hour time. And the top of the Bollinger Band now is starting to gap up. But as you can see, it's done that before. It's still angling down, isn't it? So it's constricted here. Then we went down. We've gone flat. So we may be looking to on this pinch here, although it was a pinch down. There wasn't a pinch in. So that's been lost somewhat. So 136 remains a key resistance for dollar yen. 15-minute, big old jump up on the data. We've recouped from that. We didn't get to 136. We got to 135.92 and then moved back down. So again, it's all about your time frames, I said, my friend. Tice Ball, look into the chart again, so can I sell now? Can you sell what? Can you sell gold? Can you sell gold? Well, it's been going down. As an end of hour trader, that's a significant decline. It's rejected the 20-hour moving average, which was sort of hanging around the 1800 level. The big hourly candle that's just completed between 3 and 4, courtesy of the payroll data, has taken gold under its 50-hour moving average at 1786, and now it's started to move down again. So there could be some weight for that to go further down. The next support, if this does actually now become resistance rather than support, will take us down to where we were yesterday in the middle of the day, around about 1775. So that's the next support area. If indeed it does that, obviously it may not do that and it may move up. MACD is continuing to decline. Stochastics is continuing to decline, and the RSI is declining at the 35, as you might expect. Obviously it's been skewed because of the big news announcement. So does look to be tipping lower on an hourly basis. On 30 minutes, there we go. It crashed through its 50-hour on that completion of that. So that's still moving lower. 15-minute crashed through its 200 hour. So here on the short-term basis, it's got resistance now at 1785.75, which is where the 200 period moving average is for the 15-minute chart. And there you see the MACD's turned negative. Signal line's gone under the zero line. Stochastics into the pushing down into the over sold area, but still moving lower. but flat. RSI oversold and down there at 21. So maybe looking to try and push up, but that is now resistance for 15 minutes, 17, 85, 89. And again, it's really all about the time frames that you're trading, Tisbo. So, gold under pressure simply because the dollar has improved on the back of the payrolls data. There's no more new questions coming in. So let me just have a quick recap of today's major news, the non-farm payrolls for November from the United States. 263,000 is the headline. 263,000 new jobs created in November for the United States economy. Markets were expecting around the 200,000 level, with a bias actually to the underside. We got the opposite of that. We got a beat at 263,000. Last month also was upgraded by another 20,000 from 261 to 284. Earnings surprisingly rallied both last month from 4.7% on an annualized basis to 4.9%. But more importantly, the first reading of November's earnings have spiked over 5% again. So that isn't what the Fed were wanting to see. Participation rate remains flat and becoming a little bit irrelevant. Monthly earnings have doubled expectations. They came in at 0.6 of 1% compared to 0.3 of 1%. And October's number was upgraded another tick to 0.5 of 1%. The wider measure of unemployment, the key U6 level, actually came down to 6.7% from 6.8%, and the more reported unemployment level in the US at 3.7%, which, as I said at the beginning, is more or less full employment. So the Fed, with their actions, their aggressive, near 400 basis point hike, even if they go 50 basis points, only 50 basis points in sorry, I've lost my chart. In a couple of weeks on the 14th for December, it still means a significant rise for businesses and households in their cost of borrowing, their cost of credit, their credit cards, their mortgages went very high. They come down under 7% the 30-year mortgage rate now, but it's there's still savings there from the pandemic getting eaten up more and more. But there's clearly still a very tight jobs market, particularly what looks like in the services sector. I haven't got to see the details of that, but certainly I'm just looking at the Reuters screen behind me, the Bloomberg screen behind me, and I see the 2-year yield has rocketed to the 4.3484. So that yield curve, remember the inverted yield curve, the 2-year and the 10-year, I think it was at 71 basis points or 79 basis points this morning, screaming recession to me. And the data yesterday, that PMI data from Chicago, I can't remember what number it was. It was very, very low, wasn't it? 34. That was, really jumped off the page at me yesterday. I'm saying that and I can't find it now. Where was it? Thursday came in at. Is it yesterday? It was the Chicago numbers. It's an odd. For some reason, not on here. The PMIs were worse than expected as well yesterday, which didn't help. Obviously, core PCE was weaker, so that's suggesting inflation was weakening, contrary to what we've just seen now. And I can't find that data I was just talking about. Anyway, continuing a mixed bag of data, but as we've been saying for a while, in this idea that inflation was only transitory, as the Fed was trying to say a year and 18 months ago, is clearly not the case. It does tend to stick around. It does tend to be quite difficult to move. Things like rents and things. People tend not to, landlords tend not to have to chop their rents. They tend to put them up, don't they, rather than put them down. So that adds to obviously inflation quite significantly. So if there's no more questions, I'll wrap it up. I'm going to finish my week ahead for next week. As I say, next week it's a wee bit quieter, but we have got two central banks looking to put interest rates up again. We've got the Bank of Australia, the RBA, on Tuesday, I think it is, isn't it? And the Bank of Canada on Thursday. Retail sales from the Euro area on Monday. ISM services PMI, so that PMI, that services sector PMI. Remember, the manufacturing missed significantly yesterday. See what that's like. It's expected to tick up. That would be in line with the idea that they have to pay more for their personnel, their employment within the services sector. So 55.6 from 54.4. The RBA announcement expected to take it back over 3%, another 50 basis points. 25 basis points to 3.1% from 2.8% from the RBA on Tuesday. The GDP numbers as well next week as well, across the board, isn't it? Europe, Australia, and the US, and then the Bank of Canada expect to move 25 basis points, probably 50 basis points to 4.25 on Wednesday. GDP from Japan also on Wednesday looking very negative, minus 1.1% on an annualized basis. And inflation out of China, the key noises out of China is obviously about the opening up and the relaxation of the COVID zero policy. Will that continue? Will there be any more news over the weekend? Watch that. Keep your ear to the ground for that. And then the quite important University of Michigan consumer sentiment as we start to get towards the end of the year. So that will take us to Friday the 9th of December. And then following week, we've got the Bank of England and the Fed as well, and the ECB. So key couple of weeks coming up, perhaps not as busy and important as this week. But there we go. So 263 was the headline. Markets were expecting 200, so it's a significant beat. And the dollar has accumulated. So let's leave you with the gold chart. Gold's currently trading at 1783, having broken its 50-hour moving average here at 1785. And the euro has tanked under the key 105 area, but it's had a really good week. And we're currently trading at 104.70. Again, finding support at its 50-hour moving average at 104.60. So that's all for today, friends. There's no more questions come in. I can't see that. No. So, sorry, I didn't see the charts on this. So I put the charts on. So there's the euro at its 50-hour moving average, 104.60. And gold, which I know you're all interested in, 1785 is that key support, that 50-hour. So 50-hour moving average is playing into the markets today. So take care, everyone, and we'll see you all again next week. Take care, have a great weekend, and may the pips be with you all. All the very best, everybody. Bye-bye.